It's the 302nd MPC meeting. Rate cuts as the major conversation, right from Ghana down to Angola. Nigeria is experiencing has, and you're seeing that we're experiencing rate cuts. How does this affect the Nigerian economy? You're going to find out on this episode of Market Watch. We're also going to be taking a look at GTCO, their H1 2025 results. It's out already. And then we're going to be seeing what are the sentiments around their share price? How is it affecting investor sentiment? You're going to find out on this episode. And then the stock market yesterday. How did the markets play out yesterday? Bearish, bullish. What are investors talking about? What are the high points of the market, the low points of the market, and the fixed income market? All of this on Market Watch. My name is Frank. I've got two gentlemen with me. City gentlemen. The one you watch, the person behind the articles you read on Nairametrics, and then I also have Mukhtar Mohammed, amazing gentleman, and you're welcome again this morning.
Thank you, Frank, for having both of us.
Yeah, thank you very much, Frank.
MPC, we had the 302nd MPC this week, yesterday, and it was a tough one. A lot of investors, many of them were just waiting for that announcement. And that announcement meant a lot to the bottom line of so many companies. What do you think? What's your opinion about the MPC? 27%? 50 basis points?
Well, for me, when we're ending on Monday, I said I expected them to be still holding the rate, being a little bit conservative because of the fragile nature of the kind of inflation we've seen, then the exchange rate, which I personally think is one of the key drivers of inflation. To be candid, I think I was a little taken aback by the cut on the rate. I expected it, but I was thinking it would be towards the next meeting.
Yeah.
So I think that is good for Nigerian businesses, smaller businesses also, for the manufacturing sector, even via Oliver Twist now. I was reading this morning, they are now asking for credit relief. But they were all shouting for rate cut before now.
Exactly.
So I think it was good. I like what they did. Again, it comes with its own challenge. I like what they did with the TSA also. I mean, that was also...
I was bringing it to 75, 75%.
So that also will help drive down inflation because they feel that the TSA itself was helping fund liquidity in the system. I think that was a smart move by the CBN. Then again, if you look at it, when they said, okay, the banks, you can do 75%, then later on they reduce the cash reserve ratios again by 5% again. So again, that's also giving bank more buffer for capital adequacy ratio. I think they were fantastic. I must commend them. This current management team, this MPC meeting came with a lot of shock, and I mean, what positive shock in the sense of where it depends on where you are. But for the manufacturing sector, for smaller businesses, I mean, also, but again, it might come with challenge again when you look at the fixed income space. Cutting rates ordinarily doesn't all go well for the fixed income space. But what I see is that we could still see rate, because we've not only had that rate cut in Nigeria, we have it globally now. Like you said, Angola, Ghana.
Yeah.
So even the United States of America. So what we might see, investors will be looking for where they can get returns. Even at 15% in Nigeria, 14% in Nigeria.
Still quite massive.
It's still quite massive for investors to come in. I think the way the whole issue, and I think the CBN was smart to wait for almost every nation to cut rate when we're expecting them to cut rate since. They didn't. I think we must commend the CBN.
Okay, yeah. That's really interesting. I love where you're coming from there. CBN being smart, they were waiting for others to cut rate so that we will still be attracting.
We didn't say they were waiting for others, but maybe their timing was
perfect.
Perfect, because before now...
coincided,
before now we used to have those rating every month, the CBN meet, but since Cardoso comes in, I mean, it's quarterly. I don't even know how.
No, they will meet again in November. So before now, it used to be virtually every month. Every month you have the MPC meeting.
Yeah.
But I think when it came in, you just staggered it somehow. So by the time they meet in November, you might not see them meeting in December. You see them meeting again maybe in January.
Yeah.
But again, I think by and large, fantastic MPC meeting. We've not seen that Rate cut for the first time in 5 years. That is huge.
Yeah, that's I agree with you. But yes, the angle you mentioned, that's okay. That's wonderful. But let me come from this angle. Yes, given the rate cut, of course, if at all they will reprice the existing loans, which will eventually affect companies' interest expenses. Now, but another thing is that which I would like the bank to maybe look at is not, yes, it's going to increase liquidity. The MPR has come down. Then the standing facility, that is the symmetry corridor, has equally come down from 500 plus 500 slash minus 500 to 100 to plus 250 slash minus 250.
Yeah.
So that is the situation now. Normally, it will now increase liquidity because, fine, it's telling you that okay, this is the rates. If you are lending to CBN, this is what we'll give you. Then, if you are borrowing if you want to deposit with CBN, will not pay as much as that. That's what it means. But I would like the bank to equally not only looking at to have just liquidity and sitting idle and push that liquidity into government securities. Because the essence, while yes, the credit situation might be bad, but you have to find a way where you can now structure your risk asset. But just sitting down because liquidity has increased will not give that multiplier effect to the economy.
Yeah.
Because as at 2024, the banks they have about I think 58 trillion. 58 trillion. I think in deposits. And they have a total asset base of about 217 trillion. So you have the cash reserve ratio about 25 trillion. So now the liquidity has increased, and definitely we want them to sit down, not only pushing those things, that liquidity into securities.
I think that's where you have a challenge. Because like I said, in spite of what we are seeing, inflation coming down, exchange rate coming down, the banks, the smaller business, still have their struggle. And normally that struggle has to deal now with the ordinary Nigeria. With all these things coming down, consumption has not, but people say, consumer price index has gone up a little. But if you look at it, consumption has not really come up because a lot of people are still the same minimum wage and they are struggling to purchase.
Yeah, true.
The purchasing power of the average Nigerian is still where it is. So that could also be why some of these banks, looking at their risky nature of their business, looking at their shareholder, and you mustn't forget that banks are in a critical time now. They have from now to March to beef up that capital base, recapitalization.
Okay. Yeah.
And they have that issue also of capital adequacy ratio, which the CBN has actually given them a soft landing somehow, whereby the bands to liquidity could also be used as your capital adequacy ratio to the half of the, I think towards half year. So, but I know the banks they want to be proactive because they were caught unaware with the forbearance. They might not even want to go that space again because after that, CBN can just take the ladder off their leg. So, I think for me, they are looking at, I agree that they should push it into the real economy instead of just throwing on government security. But I think I still stand that the economy is still a little bit fragile.
Okay, how about the cash reserve ratio? If you look at
the cash reserve ratio,
50% is now 45%.
It's not 45%. Yeah, that's what I'm saying. The cash reserve ratio at 2024 for the banks tentatively was, I think, about 25 trillion. Held by CBN. Now they have dropped it by 5%.
Yes.
That will equally reduce the cash reserve accounts with CBN.
Yeah.
Now, what I'm saying is this. Yes, I can to an extent I agree with the bank because of the risk environment, of the high risk environment of people being able to honor the obligations when you give out loans, they're able to pay. Because what I'm saying is that the bank should in such a way structure their risk asset, they have a structured risk assets and implement it so that in such a way that maybe you will be able to anchor it, have anchor assets where you give out your facilities, and based on that will equally reduce the risk aspect of it. Instead of, because I know now the issue is now if you look very well, go and check very well the retail ends of it. You understand the retail ends of the economy. I believe it's not getting enough fund from the bank.
At all. They're not
totally
even getting.
agree.
They're not getting
I
any.
totally agree. But again, you have to look at the non-performing aspect from the bank also, the non-performing loan from the bank also. If you look at, I'm sure you are a master in that, trying to get all this, and look critically at that, you realize that they're also struggling in that area, and they've made a lot of provision going forward. A bank like Zenith, and I'm sure when you come to GTCO also, you could also see that. So I think the economy itself, I wish they could lend to that sector very, very well. But the challenge is still there.
Would you say that one of the major reasons why the retail aspect of our economy is not getting access to this, is not getting access to funding from our traditional banks, is because of we have weak data points. So you don't have enough data to be able to tell if if somebody who's in business needs a loan, if the person has the capacity to pay back.
Yeah, yes.
What's the work of AMCON as well?
Yeah, that is one of them. But I think somehow I do share banks' reservation. Yes, on that. Because even that retail and a lot of documentations need to be done.
Very true.
And even some of them don't even have the required collateral.
Exactly.
And thirdly, I know the banking system is a short-tenured window.
That's it.
So it's not, you don't just take a customer deposit and invest in long term. So they will like to put it where it can generate money, and wouldn't like to take that much risk. And that could be the reason why they now from
I mean, there's something in Arithmetic that I read yesterday. It's time to stop AMCON.
Okay.
Yeah, so I think, again, that's another challenges that the banks are dealing with. Sometimes the fee they pay to AMCON even it's even good to risk it to some of those smaller businesses.
Yes, the AMCON and the NDIC, I see that's regulatory deductions, and it's much.
It's much.
It's much.
So I think with something that was, this also, by the way, I saw it in Arithmetics and I like it.
I
think it's something that I've been pushing, that, look, it's time you stop. This AMCON was supposed to just run for about 10 years, and now we are making it like a parastatal, like, budgetary allocation. Then they collect all these fees from this bank. And if you look at their recovery processes, and if you look at some of the companies that is AMCON have been taken over, you cannot even see those companies have come back, especially in the aviation sector.
Yeah.
They are getting worse and worse by the day. So I think it's time we look at they should. The banks are also, you see, all these things are what the banks will look at, and at the long run, what determines how good the bank is in Nigeria and sometimes globally is when you meet in that AGM. And so that is the banks are looking towards the AGM.
Speaking of the banks, let's talk about GTCO now. GTCO H1 result 2025. What are your takes about it, Idika? The result is out. It's like you go to the board in university and you're trying to check your first semester result. And now, what's the performance like?
Well, the key thing is that, yes, across metrics, they recorded decline. Revenue declined, profit before tax declined, and profit after tax and earning per share. But I think they were able to retain that 1 trillion mark in revenue, which is still it shows resilience. You understand? But I think the challenge there is not only about the decline, but about one, they didn't have much. I don't think they had forbearance, and their impairment wasn't much compared to CBN, to Zenith Bank.
Yeah,
it wasn't much like that. But give and take, I think it's still impressive, though far beyond what they did last year. And
But interim
and they were
dividend
able
was the
to
same thing.
yes, they were able to declare interim dividend of 1 naira. The same thing what they paid in half year 2024.
Yeah.
I think that is still okay. But I think the challenge is this being able to meet up with your projection, because I know during the NSC listing, Agbaje widely said that because the banks are trading on discounts, that's anything below 15% dividend yields. That means they are not rewarding shareholders very well. And at this rate, that means they have to work they have to work very hard, because profit after tax is down.
Yeah.
Very after tax of 449 billion compared to 905 billion they did in half year 2024. You can see, for them to be able to even pay that, they have to work very hard.
What do you think was the reason for this? What do you think is the reason for this?
See, with GTCO, sometimes they come up with that surprise element towards the end of the year, like what they did for investors last year. I think they've been in this space before. Was it 2023? Which even they are earning, they have to go into their reserve to be able to pay
the dividend.
Dividend.
Yeah.
They've been, and we didn't know at that time they were trying to exit forbearance at that time. So when you look at that, you sometimes you look at these numbers and you look in a lot of provisions are being made. Again, sometimes when people talked about this provision, we forgot that sometimes this provision, when they are made, they find their way back again if payment is made. That could also help towards the end here. But like Indika said, when you look at that result comparable to what you got from Zenith Bank, you seem to see like with all the challenges that we thought Zenith had, Zenith seems cheaper and very cheaper and better. And also, they used to pay the same interim dividend before. Remember, both of them were on the same 25 kobo. They moved to 30 kobo. Both of them also moved to 1 naira. And now it's like one. Then towards the year end, one moved to a total dividend of 8 naira, and now one was stuck at 5 naira. But now we are seeing towards now we are not seeing one paying 1 naira 25 kobo, 25% improvement from what he paid, and then the other one paying also the other one paying 1 naira still. Then, but when you look at the earning per share, why is it is having an earning per share reduction of 29%? You see GTCO having an earning per share reduction of almost 50%.
Yeah, true.
So that's, again, like he said, how do you meet customer? Are we going to see going back to that reserve? But as it stands now, it seems that when you look at those two big banks that we're talking that determine the FUGA. For me, the FUGA. It's the FUGAs, but for me, the two FUGAs are always GT and then Zenith. They are the front runners.
Yeah.
So hopefully,
To add to that, I think if you equally look at the results, where maybe they have to look into it critically, is the composition of their interest income.
Yeah.
The interest income is the bulk of their the gross earning. And if you analyze it properly, you now see that in H1 2025, there is a shift in terms of the composition.
Yeah.
Now, it appears that GT is relying more on investment in securities to make more money.
And again, if you
than the traditional lending.
Compared to Zenith,
compared to Zenith and even UBA. Now you can now see now in H1 2025, the contribution of investment income from securities increased to about 35% from 27%.
Yeah.
Do you get the point?
Yeah, absolutely.
Now, more than the interest income from loans and advances.
Investments.
I know very well that GTB has been a bit conservative when it comes to risk assets. They are known for that.
And you know that's now with the cut in interest rate.
Yeah, that's what I said earlier.
Yeah.
With the cut in interest rate, I think the banks have to really sit down, not only piling funds into government securities. They have to really sit down. I know, yes, they have challenges. The credit rating the poor credit rating environment, the short tenor funds, but they have to find a way of working
Trust
outside
Nigerian
this.
bank, they're engineers.
Yeah. So they have to do
Buy, sell, hold. GTCO. What's your opinion?
Mukta, you are
Buy, sell, hold.
Mukta,
buy, sell, hold.
It depends on what price I entered.
You are being politically correct.
It is at 90. Yes,
It's at 90.
it closed at 90.
Yeah.
For me, I think hold is still good because again, let's look at the long-term fundamentals of it, and don't forget, like I said, it has happened before. It has happened before, and somehow nobody expected what they will. And what I've noticed, like I said, with Zenith Bank, I don't know that you've noticed that with GTCO. You realize that their final half year is always better than their first half year.
Yeah, and
you and I know why. You know, those final half year, we have a lot of activities, where business is settling, where we have, like, especially now that a lot of business are really settled down, exchange rate is good and everything. So I think investors should be cautious. They should hold for me. GTCO hold.
Idika.
Well, I know there was time the stock hit 100. I think this is a good point.
Good entry, but that as a whole, it could be a good entry point.
It could be a good entry point at 90. Could be a good entry point, and
but you know what will happen now is what people like Indiga will always do: comparable analysis. So I'll begin to look at what is the prospect of GTCO moving from 90 to 100 or 110, and the prospect of Zenith moving from 66 to 75 or even 80.
That's so great.
I think what we have to really, I always like to advise, forget about the market noise, the prices, always find out that the true words of what we want to buy. And that's why I always prefer the banking stock, because most of them are trading below their book value. They have liquidity. You can easily go out. You can easily come in, can easily go out. So that's a very big take for me. And for me, I think, like I said, the pullback might be might be a very good opportunity.
Almost 80 something, and then we saw it coming back.
So I think there was time it was at 100, and the thing has gone down now to 90. So it could be a good entry point for investors who wants to take a position. And besides, let's see what happens the second half of the year. What I see from this dividend declaration, I see that dividend signaling. You understand? So most of them are trying to say, okay, we are still available.
But the beauty of it is that 3 months ago, we heard that a lot of these banks will not be able to pay dividends.
Yes.
Now,
that's why I said that. Yeah, that's what I said. This is a sort of a dividend signal telling us that we are still available.
And we are still doing well.
We are still doing well. We are doing well. I think even yesterday during the MPC meeting, Cardozo announced that about 14 banks have met.
I said it will not be a challenge.
You said that.
I don't think it will be a challenge. Anybody that thinks it will be a challenge, it will not be a challenge.
So let's segue into the stock market yesterday. What's your how did the market perform yesterday? Let's talk about that. And then we're going to look at the king.
Mukta has been in a better position to handle it.
You saw that pullback. You saw that pullback. Saw that pullback from Zenith. I mean from GTCO. Zenith was positive yesterday.
Yeah.
And for a long time, I think this is for a long time. I don't know. I'm starting to be corrected. For a long time, we've not seen a day whereby GTCO pulls so back and Zenith had the better price yesterday compared to in terms of price increment. You remember that even when Zenith came out with their results of 125 kobo,
yes,
GTCO moved from 92 naira to 94 naira. And Zenith now moved backward, but on the market yesterday we saw Zenith moving up. So then you saw Nigerian brewery also was among one of the major losers yesterday. From 17 naira moved up, lost about 7% also. Yeah. So what we are seeing in the market now, you saw Access Bank also dropped yesterday after they came out with that press release about extension again. So we saw that play out. So
who's the king now? Who's the king? Well, who do you think is the king? And which sector do you expect to?
Who's the king?
Okay, the sectorial,
Sectorially, I think the king
is of course is a consumer goods.
Consumer goods.
Consumer goods.
Yeah. They did as at close of trading in August, the index returned 84. I think 84%. Then as at close of trading on September 22nd, it has moved almost double to about 100.
And that's a shocking thing.
Are they going to sustain it to the end of the year? Do you see them sustaining this momentum?
Yes. Look at what is happening in the consumer goods. This boils down to what we are discussing. You know, last 2023 and 2024, the consumer goods were good companies that were affected by the FX losses and high interest rate and inflation. That really affected them. Most of them declared huge losses due to that FX volatility. Now, coming into 2024, towards the end, I think Q4, they started recovering because of the stability in the FX. Now, between that Q4 2024 and H1 2025, they have come back again with profitability. Now the market is rewarding them. So okay, if we are sure that you can continue, you know, except in 2024, I think it was only NASCOM and VUA Foods were able to declare profit in full year 2024. Among the consumer goods, among the Nestle food production subsector.
Okay, yeah.
So they have done very well in 2025.
Yeah.
And the market is saying, okay, we have seen you. We're going to bet on you more.
Yeah. So let's move on the final note, the fixed income markets. MPR. Yesterday, rate caught 50 basis points. Let's connect that with fixed income market. What's your outlook based on the macroeconomic variables?
Just briefly. For me, I like I said when we're talking, it's still a good space, especially if you're foreign investors. Because you look at rate cut, it's more or less like a global song now. So definitely an stable exchange rate. We might not see that rate cut affecting the fixed income space much like what you would have thought a major rate cut would have done.
Really?
Yeah.
50 basis points?
It will not be, because like I said again, the music globally is rate cut.
Yeah.
And then when you look at what you get in Nigeria, and then we have a stable exchange rate that is still work in progress. That also, well, remember again, sometimes why the CBN does that is that they want inflow. They want inflow of effects into the market. And again, if you look at the MBS, although we didn't talk more about it, you realize that oil output has also improved. So we have seen those coming together. So what the CBN may lose in terms of foreign investors, they are not gaining in terms of output in oil production.
Yeah.
So that could also have a little effect on the fixed income, but I don't expect it to. I don't expect it to drastically go down like that, because we have that rate cut. But I think it's still a good space. And remember, those people that play that space are paid for safety. And as it stands now, safety is always their watchword. Those that play that space. So I don't see that. I don't see where you're used to have 15%. You see, you begin to have 10%.
True.
I don't see that happening.
No. I don't think so.
They say return of money.
Yeah. To add to that, I agree with Mokta. The spread might not be much, but I think traditionally when there is a cut in rates, normally the yield on fixed income will drop, because it means that now those ones that were issued at a higher rate, people will be less attractive, and that will now drop the interest and the yield.
You said it last week.
People will now start chasing the ones that are lower.
You said it last week. That people were keen.
But do you think that people will come to equities market? Do you see more volume?
I'm coming to that now. If you look at it, but where they are going to have a reprieve is from the bank. Now the bank, the liquidity has increased.
Yeah.
And because of the let me say the peculiar environment we are in terms of credit rating, the bank might not be too keen in taking more risk.
Yeah.
You understand, in risk assets. They will go back to investment in securities. Like I said, in 2024, they have you check out the bank, they have about 58 trillion in securities. And that is likely to increase this year. So with that level of sustenance, expected sustenance from the bank, it might not really, the traditional impact of rate cut might not really affect the yield on fixed income.
And again, to add to what in your said, it's gonna, like you were saying, with that, what's the positivity of in that with the rate cut, then into the equity market?
Yes.
Ordinarily, a rate cut should attract more funds into the equity market, especially long-term fund.
Normally.
But again, you ask yourself, when there were rate hike, the equity market was still performing. So,
but when we had rate hike, we saw that the fixed income oversubscription everywhere.
That's the point. The logic is this: if you issue treasury bills at 16%, there was a time, treasury bill was even going at least up to 20%.
I got T-bills at 21% last year.
Yes.
Commercial papers even were doing about 24%.
Commercial papers were even doing at least at floor of about 22%.
Sure.
At floor 22%. Some of them are even at 27%.
Yeah, that's what I'm saying.
Because for them, for the corporate organization, it is better for them to issue commercial papers than borrow.
Oh yeah, very true.
Because even now, at 27%,
it's
still high, because by the time bank puts their charges, the thing will now be hovering around 28 or 30%, or even more than 30%. So it's better for you now to issue commercial paper for short term at maybe 20 max 27%. So it's better for them. That's why at times you see corporate, they use commercial paper more than normal debt instruments.
A lot.
But going to the equities, you mentioned it. You see how this thing, how it works out.
Yeah.
Now, like the banking sector, like we said, we mentioned it last time, will definitely benefit.
Yeah.
Even other industrial goods sector, consumer goods, they equally benefit. You know why they will benefit? Because now you've got rates. Definitely, if you want to borrow.
Yeah, true.
You borrow at a lower rate, that will now drop your interest expense, and that will now affect your bottom line.
Oh yeah.
But the beauty about it, again is
but the MPR might also improve because now it's lower, so people have the capacity to pay back.
That's what.
So the bottom line will still be a bit balanced. If your interest income reduces, you're also going to improve on your MPR recovery of the loans. Do you get my point?
You're talking of the banking sector.
Yes.
That's what we're saying.
The bank, that was saying which way the banking sector will see benefit. But again, just to add up to what he said, don't forget that most of the people that play the equity market are those that also play the fixed income market.
Yes.
So you will see in and out in terms of good price, entry point, good exit points, safe havens, risky. I mean, sometime again, it becomes not even risk, because when they look at some equity, like Indica always say, look at the long-term portability, look at the 3 months, 1 month. So I think whichever way, we'll see what plan out today, but I think it will be positive.
Rate cut. You've heard about that. 50 basis point rate cut. Equities markets, we've spoken about that. GTCO H1 2025 result came out, and you heard their opinion about that. The stock market yesterday, consumer goods doing amazing numbers. And this gives you an insight as to the sentiment of the market and sentiment of investors. Where do you stand? Do you stand on the side of equities market? Do you stand on the side of fixed income? Tell us on the comment section. This is Market Watch, brought to you by Nairametrics Television. My name is Frank. I see you every Monday and every Wednesdays. To the next one. Make sure you like, share, subscribe. Cheers.